Let us see the next question. From the following information relating to a departmental stores, you are required to prepare for the 3 months ending 31st of March 2021 month-wise cash budget on a receipt and the payment basis. And it is anticipated that working capital as at 1st of January 2021 will be as follows. The figures are given in thousand term. Cash in hand and at bank 5,45,000. Short-term investment is 3 lakhs. Debtors is 25,70,000. Stock is 13 lakhs. Trade creditors 21,10,000. Other creditors 2 lakhs. Dividend payable 4,85,000. Tax 3,20,000. Plant and machinery 8 lakhs. Budgeted profit statement have been given to us. The figures are in thousand term. January, February and March. Information is given for sales, cost of sales, gross profit. Administration, selling and distribution expenses have been given, and the profit before taxes have been given to us. Budgeted balances at the end of each month is given for 31st of January, 20th of February and 31st of March. It has been given in terms of short-term investment, debtors, stock, creditors, other creditors, dividend payable, tax due, plant ignoring the depreciation value. Depreciation amounting to 60,000 is included in budgeted expenditure for each month. This question is taken from the study material. I request all of you to go through the question, and I want you to tell me that what must be the transaction in which we would have entered upon with respect to the short-term investment on monthly basis. So friends, over here we understand the question is providing the information that the short-term investment on 1st of January is 300. At the end of the January, the short-term investment is 700. Means there is a purchase of the investment in January for 400. Do not write anything, let me explain you. We understand that in the month of January, there is purchase of investment. An amount of 400. How this 400 is calculated? It is 700 minus 300. That is what we understand. Okay. Now, we can see that say end of January, short-term investment is provided to us as 700 and end of February it is 0. What does it mean? Friends, indirectly it has been given that say we have sold investment. So in the month of February, we will be having sale of investment. We understand that so the entire 700 is the amount of the investment that say we have sold. That is an amount of 7 lakhs because the figures are in thousand term. Then you can see that say on 20th of February it was 0, on 31st of March it is 200. It means that say again there is purchase of investment by an amount of rupees 200. So in the month of March it is 200. How it is calculated? It is 200 minus 0. These are the transactions in which we have entered upon with respect to the investment for January, February and March. I want somebody of you to tell me in the chat box that with respect to the debtors, what must be the transaction in the month of only January? So friends, over here we understand that as per the given information, on 1st of January, opening balance is 2570. The question is providing that in the month of January, there is a sales of 2100. and the closing is 2600. So you may understand that is by visualizing the debtors account. Opening is 2570, sales is 2100, and the closing is 2600. What does it mean? 2570 plus 2100 minus 2600. That is a collection of 2070. That is what we understand. This is the way we can compute the collection from the debtors in the month of January. In February, what will happen? This 2600 rupees will continue. That is 2,60,000 basically. Sales is 1800 and the closing is 2500. So what will happen? 2600 plus 1800 minus 2500. That is a collection of 1900. This is the way the collection can be calculated on monthly basis. What I want to tell you friends, that over here we'll make a simple assumption that whatever the sales information which is given to us in the question is entirely the credit sales. So what would be the collection? We understand and say collection from debtors for that say we will have simple working like this. Opening plus sales, that is the debit side total, minus closing, so we get the balancing figure on the credit side, that is a collection. January month, what is the opening balance of the debtors? 2570 plus what is the sales? Sales is 2100. What is the closing? Closing is 2600. So it is 2070. Next, it is 2600 plus again what is the sales? Sales is 1800 minus closing. What is closing? Closing is 2500. So 26 plus 18 minus 25. It comes to 1900. Last, for the month of March, it is, what is the opening balance? Opening balance is 2500. Sales is 1700. And the closing is 2350. So we get the answer as 1850. I request you to take down these two transactions and try to complete the remaining question on your own. Now friends, over here you can see the opening cash balance is given to us as 5,45,000. So that you are required to mention over here as opening balance on 1st of January, 5,45,000. We already have incorporated the adjustment for short-term investment and debtors. Then we have been provided with the stock information. How to incorporate the stock and the creditors, I just explained that to you in 2 minutes of time. Other creditors, let us see. As far as the other creditors are concerned, it is provided that it is an amount of rupees 2 lakhs at the beginning. It is remaining 2 lakhs, 2 lakhs and 2 lakhs. There is no change in the other creditors. It means that we understand that say we have not made payment to the other creditors. We just have to ignore it. Next information is given to us as dividend payable. In case of the dividend payable, opening balance is 4,85,000. The closing balance is again 4,85,000. What does it mean? It means that say in the month of January, we have not made payment for the equity dividend. Then February and it is 0. What does it mean? It means that in the month of February, we have paid it. So we will show over here payment of dividend. That will be shown in the month of February. It is an amount of 4,85,000. Next, income tax 3,20,000, and you can see that it is 3,20,000 consistently. It means that so the payment is not made for the taxation, so we have to ignore it. Plant, it is an amount of 8 lakhs at the beginning of the period. Closing of January is again 8 lakh, means there is no transaction. Closing of February is 16 lakh. It means that so there is a purchase of plant. So purchase of plant and machinery, it is an amount of 800 in the month of February. That is 1,600 minus 800. Next, in the month of March, say it is reducing to 1550. What does it mean? It means that say there is sale of plant and machinery. It is an amount of 5050. That is 1600 minus 1550. Next. So all the initial balances provided to us are over except this two value. How to incorporate? I just explained that to you in 2 minutes. Sales is considered by us indirectly as the collection from the debtors. Cost of sales, again that we keep pending because it is associated with the transaction for the stock. Gross profit is only internal totaling, so it does not have any significance. We just have to ignore it. Administrative, selling and distribution expenses are given to us. In absence of any information, we assume that it would be paid in the same month. You can see that the question says that depreciation amounting to rupees 60,000 is included in budgeted expenditure of each month. What does it mean? It means that say in this expenses, depreciation of 60,000 is included. Like that information is given. So 3,15,000 minus 60,000, 2,70,000 minus 60,000, 2,50,000, 55,000 minus 60,000. That is the way we are required to show the payment of expenses. So 315 minus 60, that comes to 2,55,000. So payment of expenses 315 minus 60, that comes to 255. Next, it is 270 minus 16, that comes to 2,10,000. Then 2,55,000 minus 60,000 once again, that comes to 1,95,000. That is the way we are required to show the payment of expenses. Since depreciation is a non-cash item, it is deducted to compute the amount which is payable. Now I want you to keep space of approximately 2 or 3 lines, and then we have to prepare a working note. Why do we prepare a working note? I just explained that to you in 2 minutes of time. That on heading working note for calculating purchase on monthly basis. Okay, let us see that say how to make the calculation of answer. And why do we compute? I just explained that to you in 2 minutes of time. Month of January, February, March. Month of January, February and March. And over here it is particulars and particulars. Basically we are preparing the stock account. We are preparing the stock account to compute the purchase on the monthly basis. We will have over here opening stock on 1st of January. That is an amount of 1,300. Then we have been given the closing stock for January, February and March. So we will have the closing stock. January it is 1200, February it is 1100 and for March it is 1000. Now closing of January is opening of February. Closing of February is opening of March. That is the way we can mention the stock. On the credit side of the stock account, we will have by cost of sales. What is the value of the goods that we are selling on monthly basis? It is 1635, 1405 and 1330. Instead of mentioning cost of sales, if at all you mention sales over there, then on the opposite side you have to mention the gross profit. Either of the way you can do answer. I am mentioning cost of sales. For January it is 1635, for February it is 1405 and for March it is 1330. That is what I am mentioning as the cost of sales on the credit side. So now we understand like this. Understand carefully. This is the opening stock that we had. This is the value of the goods that we have sold. And this is the yet closing stock that we have. So 1635 plus 1200, that is 2835. Minus 1300, that will give the purchase. The amount of the purchase will be 1535. That is in the month of January. In February, what will happen? Understand that 1405 plus 1100, that is 2505. Over here it is 2505 minus 1200. So purchase is 1305. Again on the credit side 1330 plus 1000. So 2330 minus 1100, it comes to 1230. So what happens at on monthly basis? We have made the calculation of the purchases. Now why do we compute the purchase? I explain that to you. Dear students, the way we have an assumption that whatever the sales information which is given to us in the question is entirely credit sales, exactly the same way we have an assumption that whatever the purchase information which is given to us in the question is entirely on the credit basis. So we are required to make the calculation of the payment to creditors like this. That is payment to creditors. It will be calculated as opening plus purchase minus closing. That is what we understand. What is the opening debtors? You can see that the opening creditors, it is provided as 2110 plus what is the purchase 21535 minus what is the closing creditors? The closing creditors is 2000. With that, so the payment can be calculated. So use a calculator. 2110 plus 1535 minus 2000. So it is 1645. That is the payment to creditors. This is the month of January. Similarly for February and March, it will be calculated. Next is 2000 is opening. What is the purchase? Purchase is 1305. minus closing. The amount of the closing is 1950. So use a calculator. 2000 plus 1305 minus 1950. So 1355. Next, 1950 is opening plus purchase. It is 1230 minus closing. The closing is 1900. So 1950 plus 1230 minus 1900. So it comes to 1280. Okay. So now the final answer is the closing balance at the end of every month. Please use your calculator along with me. 545 plus, sorry, minus 400 plus 2070 minus 255 minus 1645, that comes to 315. This is a closing balance of January that will become opening of February plus 700 plus 1900 minus 485 minus 800 minus 210 minus 1355. So we find the closing balance as 65 positive. Okay. Now the opening of the next month is 65 minus 200 plus 1850 plus 15 minus 195 minus 1280. So the closing is 290. This is the way we are required to prepare the cash budget. Just I am writing heading of this: preparation of monthly cash budget from January to March. This is the way we are required to prepare it. Dear students, over here, the important thing that I feel is that looking to the information, we have to understand the transaction. We are required to make a comparison of the balances to understand that's in which transaction the company must have entered upon. The second important point is that we assume that the entire sales and entire purchases is on credit basis. These two are the important assumptions that we have. Just write on a note for the answer. Importantly over here, we are assuming that sales and purchase is on monthly basis. Full stop. Further, I'm sorry, is on credit basis. Further, in this question, it is important to note that comparing closing balances and using other information, comma, we have to understand the transaction. Full stop. This is the way we have to understand the question.